GETCRACK. Wake up, motherfucker.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should.
Shares of Lululemon, meanwhile, also moving higher quite a bit more, about 6+% after a beat on the top and bottom lines. Oppenheimer senior analyst Brian Nagel joins us now. He's got a buy rating on the stock. Anything in this report that you see so far, Brian, that shifts the balance of power in this debate over Lululemon? You know, you've got some strong international performance, with the Americas not as strong.
Well, good afternoon, John. Thanks for having me on the show. Look, this may sound a little funny, but I think the real key positive here is that things did not get worse. Okay, I mean, and I'm saying that seriously because you had Lululemon has had a growth problem domestically for the past few quarters. Looking through these results quickly, things have not gotten worse, and so we're getting closer, in my view, consistent with my positive call on the stock. We're getting closer to that point where the company's going to introduce new product domestically, and that should help to pump more life into domestic sales growth. So that's really it. I think that's why you're seeing the stock bounce here after market. And frankly, it's had a nice bounce just lately off of lows.
Yeah, I was about to say, we're awfully close to your $380 price target, and you said we're closer to knowing some things. It doesn't sound like more convicted. It sounds like we need to be careful around here.
No, look, I think Lululemon can get this right. And what I tell our clients a lot, is one thing that encourages me significantly here is that the problems at Lululemon are largely acute. Okay, it's basically sales weakness domestically in the women's category. As you talked about in your opening, internationally they're doing very, very well. I was in Shanghai not that long ago with Lululemon management. I mean, they have a great international business that's in the early stage of expansion. So the problems here are rather acute, and I think that makes them much more fixable in the near term.
Okay, if you're just looking at the numbers we got on the screen right now, Lululemon, and we did, Ulta right now, Lululemon, and we did, Ulta, Victoria's Secret, all higher. That would seem to suggest that there's some maybe untapped potential in some women's categories there. Is that reading too far into it? Is this more, lower expectations that we're seeing reaction to here based on the way you started your answer about things not being worse?
Yeah, no, I think this is much more of an expectations issue. Again, I'll say, like, when we're talking, when I talk to our clients about Lululemon, there's been a lot of concern. I don't believe this. I want to make sure I said this clearly. I don't believe this, but there's market concern that this is a broken brand, that it's falling victim to competition. I don't believe that. And the fact that we're looking here now, third quarter results, and again, like I said, things have not gotten worse. That helps to bolster the view that, look, Lululemon's position for better growth once we get this new product assortment in place.
Yes, now Kroger Chairman and CEO Rodney McMullen. Rodney, thank you for being here. So let's start with the merger, because I know that sentiment has been impacting the stock here. What's your expectation leading into the new year?
Well, we're really just waiting for the judges to rule in the state and federal case. As you know, we're incredibly excited about what the merger will do for customers, because we've committed to investing $1 billion in lowering pricing. We've also committed to continue to invest in associates and supporting communities. So, we feel great about the case that we were able to present, and we know, we know how people buy things, and people go to Costco and Walmart and Amazon and other places to buy, and they eat at restaurants. And, for us, it's really an incredibly competitive market, and we're looking forward to the rulings.
It's been a difficult road. There's been some executive turnover. A lot of details about your business have been kind of demonstrated in the public arena as a result of just the court process and litigating your case. Do you still think that this is the best move? Are there any regrets in kind of pursuing this in the first place?
Oh, no, not at all. We knew that it would take time and it would be difficult, but it really does allow for the things that we've talked about, that I just talked about, in terms of supporting customers, supporting associates, and supporting communities. And all along, we knew that it would take time, and that was one of the reasons why it was so important to find a great divestiture buyer as well.
What happens if it doesn't go through? What happens if the judges don't rule in your favor? What happens to Kroger? What happens to Kroger?
Well, if you look, Kroger, and I talked about it on our earnings call earlier, we've always made sure that we had a fabulous business model with or without any mergers, because we don't think you ever want to get to a position where you have to chase a merger. So if you look, the business continues to perform, and I'm super proud of our teams, because they've continued to deliver throughout the merger work, being ready if the merger does get approved, but also continuing to connect with customers and supporting the business for future growth. We also have an incredibly strong balance sheet with a lot of capacity to do whatever is right to maximize shareholder value. So I feel really good about where we are.
Rodney, it's kind of remarkable that, it was over 2 years ago when you struck the deal for the merger. That was at a time when, grocery prices were quite high, inflation was not under control. Now it's a different story. Obviously, pricing has come back into line. Food at home is actually now become more affordable than food away, as you suggest there. What's the general tone right now of the business and of customers' capacity to keep spending?
Well, if you look, it's really bifurcated. Customers on a budget continues to be under strain from the cumulative effect of inflation and the higher interest rates. So as interest rates start coming down, that will be very beneficial for that customer. If you look at our mainstream and upscale customer, they are behaving exactly the way they did before COVID. We are starting to see people eat a few more meals at home versus going out to restaurants. And, over time, somebody can, if you prepare something at home, you can eat for a third to a fourth of the cost versus going out to a restaurant. So
Hello. All right. Mic working. Okay, December 6th, 2024. Got a lot to talk about. Past 2 days. Very interesting. We've gone through the gauntlet. We got through payrolls. So that's done with. We only have CPI data on Wednesday next week. So I expect market to continue to melt up. We made new highs on the S&P 500 and the NASDAQ 100, and Bitcoin is goofing around at 100K, keeps bouncing around there. So very good. Everything is set up. I didn't do too much because I said I would quit trading on Monday, but I took a few opportunities here and there. I wasn't really that aggressive. Sadly, I guess I should have been more aggressive, but I have to stick to my principles and be like, well, year's almost done. You got your money. Don't be greedy. Don't be doing anything foolish. But yeah, there were a lot of short opportunities, a lot of long opportunities. You could have done everything, every direction, each direction, every other minute. It was crazy. But I was like, I'm done. I'm tired of this shit. I'm not a day trader. I don't like that. But okay, for the whole month on November, I pretty much got 100% gain. I think that's like a blowout month. You know, it's one of those months that just click, 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 trades everywhere, every second. And we got to consider everything into next year. So if you have trades, so you look at the banner, right? All the tickers I mentioned down there, like everything started clicking, man. Like a lot of stuff. There were pullbacks, and then they just bounced right back off. That's exactly what you want to see. So like RXRX, it ran up on Monday or Tuesday, something like that, 21%, dropped back like 7-8%, shot back up 21%, boom. Sound, Sound, SOUN, it was up 30%, you know, things like that. So we'll go get into the charts later, but for now, um, I'm gonna go over the retail stuff. So I'm gonna go over those other charts later, but I gotta go over the retail earnings, and we gotta look at junk like Dollar General, Dollar Tree. A lot of these charts are setting up very nicely because they've been beaten up for quite a while, for many months, you know, and I like looking for trash. So when the new year hits, I'm looking for the trashy stocks that suffered for the past year or so. These are the kind of stocks that you want to look for because you never know, you might hit a Carvana, right? Carvana would have been really good. So we're talking about Kroger here. It has a nice setup, you know, for the past 2022 into 2020, gonna be 2025 very shortly. This kind of shape, this kind of pattern is breakout time. That's breakout time. Okay, guys. So this is a breakout. Now let's look at the trash. Let's look at Dollar Tree. Garbage. This is complete, utter, terrible chart, right? It's right back to where we were in COVID. Perfect for next year. This thing could recover. So you never know. So we got Dollar Tree, DLTR, Dollar General, same thing. It's even worse than Dollar Tree. Holy crap, this thing is back to 2016 levels. Perfect. Yes, these are the stocks I like to look at. Now, let's look at the females. What are the females doing? We had Lululemon earnings. Oh, yes. So this thing bounced off of 260 in August, coming back to 400. Looks like it's forming some kind of range here that might break out sooner or later. So let's see. But even if you don't buy Lulu, this is good sign for the economy. If women spend money, that means the economy is doing well. And if you remember, we did a scan a couple like streams ago. I did a scan and I looked at what are the best looking industries a couple days ago. And they were retail apparel, so clothes. They were gambling. I think those two, when you see people spending tons of money on clothes and gambling, both like something that people kind of need, but they can also spend in excess. Plus, you have gambling, which is like purely discretionary. The only reason you're gambling is you got a lot of liquidity. You have free cash flow. So, unless you're assuming everyone's an addict, I don't know. But when you got this confirmed with Lulu, and next up is Ulta, makeup, ULTA doing earnings is popping up, so it's trying to crawl back up. So I'm going to be watching this as well. I'm not necessarily saying I'm going to trade any of these things, but this is a good sign for how strong next year will be. And Victoria's Secret, probably the most discretionary of the clothing, bouncing off since August from 17 now up to 48 after earnings. So yes, these are good signs, very good signs. Okay, anyway, let's go on to AI. Let's talk some AI stuff. Let me do Palantir first. So Palantir had another good day, one of my favorite ever stocks. I mean, if Palantir continues to keep going up, like I'm up like 800% on this crap Ola since I bought it up at 8, 9, 7, 5, whatever around here. Now, if you missed a train, HB took a gamble right here at 21. He's up nicely. But if you missed a train, you got to wait. Okay, next year is the time. So when you look at stocks for the new year, You look at the winners and the losers, okay? So it's always good to look at both. Now, the winners, they're going to pull back. People are not going to take profits if they don't need to because they're afraid of tax man, okay? The tax man. So they'll wait as long as they can to get into the New Year's. And then the first week of New Year's, you're probably going to see a shift. So you'll see this thing start to pull back. And then you would be watching, well, all right, what's the next place it would logically try to pull back? It's very far away from its moving averages. It's already new highs. We don't know, right? It could pull back here, right? 45 or whatever. I mean, I remember someone was saying like, oh, the CEO sold at like 30 something. Oh, the stock's probably going to go down. Wrong. I think Peter Thiel sold at like 40 something. Well, is it going to go down there? Nope. Still went up. So if you're going to rely on CEOs and insiders selling to manage, no, that's not going to work. All that matters is liquidity. Even they don't know how the stock market is going to push their stock. And all they can do is like massage news or whatever, but even that has limited effect, right? It depends on the market. Totally depends on the market. Okay, so let's go into Palantir news today, which boosted it up another 6%.
Welcome back to Overtime. Shares of Booz Allen Hamilton up today after the defense consulting company announced a partnership with Palantir. Joining us now in a rare and exclusive interview is Booz Allen Hamilton CEO Horacio Rozanski. It's great to have you here.
Thank you for having me here. It's great to be here.
So I do want to start with this partnership with Palantir and just what the significance is of it, and perhaps just as importantly, the fact that this is a partnership that was born out of this conference last year.
Absolutely right. Yeah, Alex and I met here last year. We began talking about our companies who already knew each other in the market, and we said, let's do something bigger and better together. And here we are, announcing a year later.
So what does this partnership enable then?
So they have great technology and great people. We have great technology and great people. And the thesis is we can move faster. To me, I'm obsessed with speed. I think our country needs to speed up. I think the Department of Defense needs to speed up. And I think industry plays a role in that. And we wanted to do some work and something tangible to obviously drive revenue and drive opportunity, but also prove the concept that if we get together and we do something together, two companies that couldn't be any more different, that something great and fast would happen, and 45 days later, we had a prototype.
Yeah, Booz Allen Hamilton has really been on the forefront in terms of AI development and capabilities as well, particularly where the government is concerned. So what does this do to now, I guess, amplify that? How are you thinking about that type of digitization and adoption with a Trump administration coming in?
So one of the great things is this is going to be our 20th administration transition in 110 years as a company. And we are always squarely in the side of change. And AI is potentially the biggest change we've seen this century and the biggest change that is going to drive national defense over the next 20 to 50 years.
Stocks, defense stocks, including Booz Allen Hamilton and contractor stocks, have sold off since the election. There seems to be this sense in the market, at least among investors, that you're going to have DOGE coming in, you're going to see cuts to government spending, you're going to see layoffs potentially within the public sector, and a lot of disruption. And so investors have been taking that as perhaps a negative for government IT services companies and contractors like Booz Allen Hamilton. Is that a real risk here, or are there potentially tailwinds when we are talking about things like efficiency and productivity and cutting government workers, which perhaps means outsourcing to contractors?
You know, the way we see it is change is necessary, right? It's not that we're doing the wrong things as a country, it's just we're doing the right things too slowly. And DOGE is positioned to act as an accelerator. So we want them to succeed, we need them to succeed. And what's going to come from that is all the things you're talking about. Greater use of technology, greater use of dual-use technologies, things that have been created for the private sector that can be ported into the public sector, more focus and investment on the key critical missions that matter the most to this country, and a look at things that are inefficient and that, frankly, either need to go away or need to be improved. And so, honestly, who can disagree with that?
How are you thinking about that across your different businesses? Because you have the defense business, but you also have a civil business.
I think it's true across all of our businesses. You know, we've built a position where we're focused on some of the key missions, the Indo-Pacific, space, public health. These are all areas that are need to be transformed, need to move faster. And our job is to bring these dual-use technologies and make them valuable into those missions. I'll give you an example. Most commercial technology assumes perfect connectivity all of the time. If you're a cloud provider, you assume that all your enclaves are going to be able to talk to one another. That's not true in defense. If you're in a ship, if you're in space, if you're in a submarine, you almost have to assume the opposite. So what Booz Allen brings is we can take this great technology and make it useful in those settings. So for us, that's upside. And similar stories can be told in the civilian sector. Similar stories can be told in intelligence. We're optimistic. I mean, we recognize that at the beginning there may be all of this creates uncertainty. Transitions create uncertainty. They always do, and the market has responded to that, as you said. But honestly, I'm bullish. I think in the medium term, in the long term, this is great for the country and it's great for Booz Allen.
So what is your outlook then for defense spending? What is your outlook for the geopolitical landscape? You published an op-ed today, and you talk about this three-time frame. You published an op-ed today, and you talk about this three-time frame process.
So, I was borrowing from physics, where they say there's this three-body problem, right, which cannot be solved by conventional math. And the three-time frame problem is the same thing that we're facing as a country. So we're at the same time supporting technologies that have been around since the 1950s and 1960s, modernizing the things that are in play today, and building for the future. On any given day at Booz Allen, we're hiring an astrophysicist to work on quantum, and somebody with COBOL programming experience to help support the system that's been around since the 60s. We need to move faster through these phases because technology is accelerating so much, especially at a time where a lot of our adversaries, China, Iran, Russia, North Korea, are coming together into a military and economic bloc that pose a real danger to the free world. And companies like Booz Allen, like Palantir, like many others, need to be part of this solution.
New World Order, is that the way to think about this right now?
I think the U.S. needs to continue to lead. I think the U.S. is in a leadership position. I think the U.S. cannot do it alone. We need allies and partners in the Indo-Pacific, in Europe, across the world. And I think the U.S.'s economic engine is going to be the driver of success, just like we were here in the Reagan Library, just like it was during the Cold War. And again, I'm passionate about this, and I think Booz Allen can play a role, and I think a lot of companies need to get in the game.
That is a big talking point here, is this intersection of the economy and national security. It's one we're going to be talking about quite a bit as the weekend continues to unfold. So Horacio Rozanski, Booz Allen Hamilton CEO, thank you so much for joining me here.
Thank you.
Yes, the New World Order. The New World Order. Isn't that nice? Okay, what is the New World Order? Well, I have no idea. I'm bullish on the military-industrial complex. I am bullish on whatever the New World Order might be. I guess dystopia, buy dystopian stocks. Very bullish. So let's look right now at GameStop. Let's shift gears here. Let's shift some gears here. So, now, I've been holding this piece of crap since around 23, and then I bought more 26, 25, 26, 27. And okay, you get around into Thanksgiving and it decides, oh, it's December now. Let's pull back. All right, you pull back, you piece of crap. You pull back. And then yesterday, Roaring Kitty has a tweet. Okay, well, honestly, I don't know what's going on. I don't really care. I just see a chart. I see a smile. You see this smile from June 2024? You get a smile. You get this nice push into 30. A lot better than the last time I was in here in July. I was trying to see the same thing. 23, 26. I was getting in to see if it would pump right here in July. It failed. That candle right there failed, right? And then the next day, it just went back to 26 like this. And I said, get the hell out. And it crashed ever since and made this new range. Now, here, we're doing it again. This time, it's more sustained. Okay, lot more trading days, pushing it up. Then you have two big candles. Now, I'm going to give it a benefit of a doubt, right? Why? Because this time we have small caps going up. So the conditions have changed. the overall stock market itself is going up. So I'm giving it more leeway. Instead of summer, which is exactly opposite, where there was no strength in small caps, the large caps leading the Nasdaq and S&P were already tapering out. You saw this is what happened in July was coupled, like I think it was around July 10th into the 12th. You saw semiconductors crap out. And then after that, semiconductors fell with Nvidia leading the way down, ASML, all that stuff. And GameStop doesn't have any momentum to take it away from that. That's like a gravity well. So, as they say, high tide, low tide, these are the things that lift up the boats. So, even if you have a small boat, high tide, low tide, or a big boat, it doesn't matter. It'll take everyone up and down with it. And in this case, we have better conditions, and I'm taking more of a chance here. And I would say next week we have earnings. Usually earnings for GameStop is going to be bad, but maybe this time is different. Let's see. I'm going to be willing to give this piece of crap a chance, okay? GME. So, and the other interesting thing is when they gave that tweet, Bitcoin made itself get over 100 and did this. You see this candle here? You have two huge wicks up and down and this little body. Crazy action. So let me look at the 40-minute chart here. Once you see this is kind of a classic pattern in crypto. It's called a BART, like Bart Simpson. Okay, like you look at his hair. So his head, right, and his hair, blah 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 blah, and it comes down, right back down. Usually, when you see a BART like that, a BART pattern like that, that signals low liquidity, because there wasn't very many people really buying up here. This was probably just a short squeeze on that news that Trump had a SEC pick already decided. And then after that, it just crapped all the way down. But if you see here, huge wick at 91. So when the liquidity was very low, because there was probably nobody willing to buy above 96,000, right? 95, 96. And you see, that's why I put these two thick pink lines here, because I knew this area was the most contested, because this thing has been like the 50-yard line of this whole game since November 21. You see it fighting up and down, back and forth, bulls and bears, whatever, don't care. So here, very good sign. And at that point, you go, well, I think we're ready right now. I think we're ready to fight for next week. So the weekend is whatever. This thing is just going to go gyrate around 100K, right? Doesn't matter. Because what is important are the little altcoins. So we've been covering a lot of the altcoins. And when you saw that breakdown, these things shrugged it off. I got Litecoin, a really good indicator. And then you got your two leaders, H bar. Right, you're going like, shit, look at that. It had a gradual down, and it ignored that whole, like usually when Bitcoin has a big hiccup, these altcoins would just go violently up and down like crazy, but it just shrugged it off. And I'm like, oh, that means there's plenty of liquidity outside of Bitcoin. So whatever Bitcoin is doing is not affecting it anymore. So I am getting even more bullish. So you see what happened, right? Like once it did its calming effect, and then once Bitcoin started moving back up, then this thing caught up. So it's doing its little thing. I would say like this is very bullish. You got this pinch here on H bar and whatever. The H bar is ready to go up for another leg next week. If Bitcoin wants to go to 115, 112, that's it. You're done, dude. Like this thing's probably gonna keep going. Now let's look at Ripple. Let's see, same thing, right? You see that? It hasn't even done it yet, but it's trying to. So Ripple might catch up with H bar later. Now we have another contesting coin SUI USD made by some engineers from Facebook Meta. This one has actually been going up ahead of that whole thing. So also very curious here. So I would say like a lot of these things, a lot of these altcoins, yeah, you are going to have plenty of time to gamble in them, I think. I think this time around, we're going to see a different phase of Bitcoin. Usually Bitcoin, when it has violent jolts. So let's say it gets up to 130, 140. That's my target, this phase. Usually it would have a drop of 30% right after that. So 30 or 50%. 50% being, we don't have much history on Bitcoin. So this is tough, right? So take this with a grain of salt. But let's say you got like, it goes back to 70K if it was 50% cut from 140. Okay. Let's say it's like 30% cut of 140, right? That's like 42. Okay, 42 down. So 42 off of 140. So it goes back to 100K about, right? So very good. Okay, as long as it stays somewhat stable around 100K, 95K, I think these altcoins can keep doing what they're doing for several months, maybe. And if we're going to talk about that, we can talk about I don't know if you heard about the Huakta, whatever. The Hawks. It's the meme coin, this bitch. Here. Let me share this. Oh shit. Here we go, guys. I have no idea what's going on. But let me try to find it. So if we're gonna look at the whole world, yeah, here we are. There we are. Haley Welch pumped to 500 million and retraced to 90 million in market cap within 10 minutes. HAWK meme coin. Okay. And I think some people did some investigation to this. Like here, let me see. Yeah, they did some investigation. I think she made out with 300K. Something like that. I don't know. Huok Twa, you fucked up big time. How can someone who bought nothing profit 300K and not just one person, but many? The proof is provided below. All right. Well, I don't know. You're going to have to find that tweet and get that shit. So I don't know. I'm not going to waste my time looking at the blockchain. P Black, that's the other stream. You're on the finance stream. Anyway, Huok Twa. Yes. So what else we got? Here we are. Here's something else. let me find this one. Okay, let me see if I understand what this is. Hi, Haley Wells. My $35,000 that I purchased of Hawk is now $2,000 after 10 minutes of buying. I am a huge fan of Hawk Twa, but you took my life savings. Okay. Now, for people who don't understand charts, this is why I tell you why it works. The reason looking at charts work is because human behavior is the same, and new suckers are born every minute. You just can't avoid it. I can't do anything. I can't save all these people. All I can do is read charts and go like, well, is this stock going to go up or down? And I'll show you. Like, did I know something was going to go up? No, I don't. Like, you gotta study your homework, you gotta study your homework. So let me get my thing here. So let's look at SOUN. Let's look at this. I didn't buy much of this stock, but the way you look at the chart, you see this? It's making a smile. Okay. And then not only that, let's look at how it's doing overall structurally. You have this lower range from 2022 into 2023 bounce up, and then you defend it here at $3.80 something cents, and then you curve up here, and then you start moving back into this rectangle. And so, my cousin bought it around 6 or something, and she was like, "Here, you see this big red candle of 2 weeks ago? It was like down 11%." She was like, "Should I sell? Should I sell?" And I'm like, "I don't know. I would just hold if it was me." I have no clue. I have no clue, right? I can't predict it's gonna do this, but 2, 3 weeks later, right? Look at that. It's up 61%. Shit. And all I can say is like, well, just look at the chart because let's look at RXRX, another AI but slash pharmaceutical stocks. You have this thing. It's a lot crappier than SOUN, right? But hey, it's defended this area before, this $5 area. So if it drops below 6, I'll buy. And if it's going up, I'll buy some more because what I'm telling you is that right now, the conditions for small caps is a lot higher. A lot higher. Drop links to your investment. I'm gonna try to make a blog, P Blacks. So, but you just gotta watch my videos for now, and then I'm gonna start trying to make a blog, and then let's see. I'll try to work with Garion and make it more professional. Maybe we could do something. Portia and Garion, but Portia might have way too much on her plate at this point. So I'm gonna try to get some people together. Let's do this, right? But for me, the problem is I'm not organized like Portia. I'm not professional. I just did this for myself. But the reason I'm doing this now is because I feel like inflation is not gonna be gone. Okay, you're gonna keep having inflation. So I suspect that the next economic downturn will be kind of stagflationary, meaning that you will still have high inflation even when the economy goes down. So usually inflation is only killed when you get a recession. And the next coming recession, I think you'll have high prices and terrible economy. That is the worst. Central banks can't fight that. That's the economist's worst nightmare ever, to have stagflation. I know it's been bandied about. I know Imperius comes on here and talks about that shit. He always does blah 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 or some other doomer. I'm not trying to be a doomer pill, but I'm just saying that the only way you're gonna beat inflation is to try to get more fiat. This is the only way, right? The only way you can beat it is by essentially trying to get more money. So you're just treading water. So in a way, which sucks. So that's why I'm trying to tell you this shit now, so you can try to get rich ahead of the storm, so that you'll be more comfortable when you're treading water. Because that's about it. That's all I can say. But anyway, yes, that's future. We got next year. We got a whole next year. I think we got 2 more years, man, of doing this. But in any case, look at this chart, right? RXRX. This is another reason I need help. I think we need AI to quantify this. I just can't tell people well, why does sound look better than RXRX? Why are you more bullish with this one? Blah, blah, blah. And I'm just well, it has this shape and that shape, but that's not very quantifiable. What does that mean? Shapes and pictures and graphs. So that's why for me, it's I'm out. I don't know why. I just look at it, I just see these patterns again and again and again, and it's just yeah, I go long here. Why? Just because it looks like that. And if you look at Bitcoin again, let's look at Bitcoin again. You see the way it does its movements? Look at this thing. So even though it's very exaggerated with this Bart shape here, because that's very characteristic of crypto, you see this pump and dump, and then you have a wick, and then you move into another range. Well, SMCI did that earlier this week. It doesn't look like crazy like crypto though, right? It doesn't have that BART shape, that big BART shape and all this stuff, but it's the same thing. Like if I go down to like the 3 minute or whatever, like you won't see it anymore, right? You can't really see it, but it's just like, see, there's not really a BART shape, but it's like it kind of is. It's like you pump, you got no buyers, and then when you realize you're running out of any kind of liquidity up here, you're like, oh shit, I gotta lower the price. Boom, 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 boom. There's no new buyers until here, which is what the old resistance was way back when. That's why you see this little blip here, this little action here on Monday before it continued on to the next area of liquidity here. It just sliced right through it and went back to here. So there were no buyers from 42 and above. You see, so this whole area here was just distribution. So all it is like you're trying to find buyers and sellers to create a range. So if you look at Wyckoff, so I gotta do the fucking, oh man, I gotta give you guys the homework or something. But you know, this is why things move in this pattern. And I think another way of looking at it is the auction market theory. So you see, like here, move up to the next level, do sideways, go up to the next level, go sideways. This is kind of a BART, right? This is kind of a BART shape. And then you go sideways and you go down sideways. This is perfect like auction market theory right here, because auction market theory is always like this, like jump, sideways, jump, sideways, jump, sideways, jump, sideways, jump, sideways. Like that's it. That's beautiful. That's exactly what it is. And if you can look it up I haven't found any good article on. Let me see if I can find one on Google. I think I used this one before. So yeah, here, I'll give you a link. You guys can go here and read it yourself. So that's another way of looking at it, which is very Wyckoфfian anyway. So if Wyckoff and all that stuff, same thing. Auction market theory. So you can treat the market like an auction house, right? You go to the auction, you see those guys like with those paddles going up, like, yeah, 100 V, 100, 500. That's it. That's all it is. You're trying to find the next guy pushing the price up. And then eventually you'll hit a point where like nobody in the room wants to bid on that thing, right? And then the price is stuck. And instead of going one direction, you go both directions. So so the market is always trying to find where people want to bid on which price. And this is why, actually, you know what? I'll tell you this. You can also use thermodynamics as an analogy for this too. Like the reason trading works is because you're trying to make money off the inefficiency of the market. So people who believe in market efficiency never believe in trading. They think this is random. This is a random walk. So they think like the whole market just moves up and down randomly. So that's their model. That's wrong. It's not random. If it was completely random, I wouldn't be making money. Humans are dictating where it goes, okay? And it's based on behavior, emotions, all this shit. And also like insiders and people that manipulate. All this stuff will be shown in the charts. People are actively manipulating or they're actively trying to push prices somewhere, market makers, whatever, it doesn't matter. All it is it's not random, okay? So people who believe that the market should be efficient, this is their ideal, it should be efficient, meaning like if you got two robots talking to each other, what price should this company be valued at? I think this price should be here. And the other one will be like, no, I rather think it'll be here. And then they'll just shake their hands within a nanosecond, and the price would just suddenly hit to a point where they both agree and they'll be done. Then if the market looked like that, then every time we have earnings report, we just jump from one thing to another thing to another thing, right? That's not true. We have news. We have people emotional about news. We have people worried about Trump. We have people worried about Kamala. What does that matter? Nothing. It doesn't matter. What that does is it affects your price and your perceptions. So because people have a perception of where things should be, where should they go. They're not robots, right? A robot would just try to be cold, analytical, and push it to the exact price every time. So you would not see these jagged motions. You would just be like, oh, it should just bounce here, bounce there, bounce here, bounce there, and that's it. But because there's inefficiencies in the market, you can make money. Because why didn't just SMCI, so like tell me with SMCI, like, so they said it was going to be delisted from the NASDAQ. So that was the news. So what changed from here? So before, people were like, oh, NVIDIA, AI, pump, pump, pump. So why did you take it from $26 to 123, whatever? And then all of a sudden you crash it back down to like 18. And then now you're back at 43. Why couldn't we just go from 35 to 43 directly? Because you can't. That's how you make money. If things were precise and people had all the information at all given times and people were not emotional, you wouldn't have these stupendous moves up, which is like, this is way over. Like I was in SMCI right here, like around at like this point, $9 or something. Once it jumped up to 29, I was like, what? You guys are crazy. This is overvalued. Well, who cares? I'll just wait, because then it just went sideways. And then more news was like NVIDIA, AI is going to take over the world, pumps it up to 100. I didn't take that whole advantage of that whole range. I sold like halfway. I was like, you guys are nuts. But, you know, I underestimate the stupidity of humans, I guess. Because, like, see, you went over exuberant, you drank your Kool-Aid, went super high, and now you were just like whoever the morons here, because Morgan Stanley or somebody, some analyst was saying like, oh, we initiate a buy rating of this stock right here, because so apparently Morgan Stanley never talked about this company until it got to the very top, said buy. So I guess all the morons bought here. And then when it went down, they were like, I'll just keep buying. Maybe it'll go back up. And then all of a sudden, bad news, bad news, bad news, bad news. Great. So all you got there was going nowhere. You basically went nowhere. If you could have just stayed from August 2023 last year and got the same price today. Just about. But because of all this stupidity, you had this huge trading range up and down. And that's the auction market theory right there. That's it. That's Wyckoff. That's auction market theory. That's all it is. And that's how you make money. You make money on the stupidity of the markets, the inefficiency of the markets. If the markets was actually just about fundamentals, people just reading 10K, 8K filings in the SEC, then, you know, I'd just be out. I'd be done. So, yeah, that's right. CKJ3, yes, I am looking for 50. That's the next place I'll sell the rest of my shares. So, yeah, so that's right. Right here. So, yeah, that's where I'm targeting as well. And CKJ3 talk about sound around 18. That's probably near the old top. Yeah, I probably would be selling at this point on SOUN anyway. I wouldn't be that greedy on that shit. So I'm done. That's like a lot of money already. I mean, it's not a lot of money for sound. Sound. I didn't put that much money into it. I didn't believe it that much. I mean, this is still a piece of crap, right? Makes no money. The company makes no money. There's no fundamentals. If I actually cared about fundamentals, I wouldn't make any money at all. Then the only time I would buy a company is when they start making money, right? Well, that ain't gonna work. Other ones, yeah, we have a whole lot of like tickers to go through. So I better continue on with the videos. Here, let's talk about some AI.
ServiceNow hitting a 52-week high today. That stock is up 25% so far this quarter as demand for AI software continues to ramp. And joining me now for Cloud Week is Bill McDermott, CEO of ServiceNow. Bill, some more superlative here. The stock is up almost 60% year to date. Market cap now bigger than Disney, just shy of Adobe, closing in on SAP, where you used to be CEO. So as we look ahead to 2025, you've got agentic AI on the menu as well. How much more transformation is there left in the tank?
Oh, John, we're just getting started. If you look at the AI platform for business transformation, ServiceNow has formed itself as the control tower for AI transformation across all other platforms in the enterprise. And what's really happening, John, is work is not happening in a single department. Work goes across every function in an enterprise. So it's our ability to manage the end-to-end task and request management process. And this includes all people, all processes, all data, and all systems. And we're the only enterprise software company in the world that has the end-to-end solutions to excel at business transformation management, because we have one platform with one architecture and one data model, and that makes AI rocket fast, totally secure, and cheap to run. And that's what people love about ServiceNow.
Something that I'm noticing here, Cloud Week, after I've been to Microsoft Ignite, we saw Salesforce earnings this week as well. There are a lot of people talking about working across the hyperscalers, across clouds, but then you're starting to see some sniping, particularly Mark Benioff at Microsoft and Office. And I wonder, what does that say about this stage that we're in right now in cloud as we look ahead to AI really ramping productivity?
Well, when I think about our position, ServiceNow is really the workhorse that's putting AI to work for people. No matter what system we connect to, we give you a bright future because ServiceNow is working for you. But this is what I think should be very interesting to your viewers. Most AI agents today are stuck in their own siloed system, which, John, those siloed systems have multiple instances in almost every large company. So by adding AI agents to siloed systems with multiple instances that weren't well integrated to begin with, you're simply adding to the hornet's nest of complexity. So our position is rock solid. Our ServiceNow AI agents talk to each other. They talk across different systems, and they manage multiple different workflows in an organization. And we string this all together with an orchestrator that automates the entire organization, not just one cloud or a single function. And since you mentioned Microsoft, we've always expanded our partnership with Microsoft. We're modernizing the front office now with Microsoft by connecting Copilot and our AI agents with Microsoft's AI agents, and now together, two market-leading companies are telling customers we're in full cooperation mode, and I think that'll be very helpful for our customers and not such good news for the competition.
You mentioned the competition and a hornet's nest of complexity. When do customers start getting stung?
When do customers start getting what, John?
When do customers start getting stung by that hornet's nest, and we start to see some impact from that?
John, it's a great question. And the reality is customers are in the early days now of investing in AI. And the feedback that I already have and that I got yesterday from a very large bank in Brazil, to optimize for a single function for tasks in a disconnected, uncoordinated manner, while you might help a person do a task more efficiently, you have to have a request and you have to have a closed-loop action and process that gets indexed and recorded on an end-to-end basis. Only ServiceNow does this in the enterprise. So I think the customers, once they hear our message and they understand that we connect the data fabric, which is, think about this, unifying data from hundreds of systems, to the app layer where you have all these disparate, disconnected, unintegrated apps. We put it all together, and our agents work with everyone else's agents. So if you want to invest in agents in a silo, go for it. We'll make it work better anyway. But I do think people are getting smart, and they're putting their money on ServiceNow because we deliver fast, and the ROI is exceptional.
Oh, man. Man. That dude is like a used car salesman. Kind of talks like a mob boss too, man. I don't know what the heck that guy does. But anyway, it's like, let's look at the chart. So ServiceNow, you see that AI, pump since 2023. Very good looking chart. So again, these type of things we have to look at. We have to look at a lot of these software type companies. We have another one. So Snow. Snow has been kind of beat up since 2022. It had a high in January, fell back. Very interesting looking one. Adobe, another one. Yeah, been sideways. So there's a lot of software types. Oh, Twilio, yeah, it broke out from earnings, still doing well. I see. Twilio used to be one of my favorite stocks in the 2018 era, right here. 25. I bought it like around 25 when it was doing nothing here. When it got IPO, it crashed, and I just ate it all up in 25, and it went up to 140 around there. Yeah, I dumped it all. Now, look at this. We got another range around 50, right? And it's broken out. Twilio, TWLO, is this something we should look at? Yeah, maybe. So there's a lot of tickers to look at. Too many for me to even like deal with, honestly. I mean, I'm out of the game. I don't really be needing to like be aggressive and do all this stuff again and again. These were so many years ago. I was doing this stuff. It's been 5 years since I started doing this trading crap, and it's just like I'm tired. It's a young man's game. This is a young man's game. Okay, this is not my game anymore. I really don't feel the need to like try to outperform everyone else. But you need that hunger, I think, when you're trading. You can't just be lackadaisical. Okay, I'm going to use a big word there. Lackadaisical. You got to be hungry. You always got to be there right on point. Be like, I'm here pre-market. I'm here at the open. I'm here at this time. I'm going to be doing. I'm serious. I think most of you guys will just probably more benefit when I talk about rotations of ETFs and sectors. That's probably better. But I think a lot of you guys want more, right? So that's why I give you those penny stocks. They're crazy, but you can make a lot of money on penny stocks though. And if you have a whole list of penny stocks, you can trade them all week. All week. Every one of them was pumping, dumping left and right. And you could have been scalping like crazy in both directions. So as long as you just study and be disciplined, yeah, you can do it. You could do it. And then we're not even talking about options yet. I'm just talking about straight stocks, right? And when you add the options component into these things, okay, you're very advanced. You're just like, okay, I bow to you. I bow to you. That's like you're adding 2-3 levels to the game, and that, yeah, you can make a lot more money. And at that point, you should probably just work at finance. Honestly. Like, yeah, if you really love it, you could snort coke all day. I'm sure that's what they do. But just to show something, so this is what's possible. Okay, this is a portfolio for the end of today. That's it. I'm done, right? So a lot of this stuff. So I've went up and down. I think I should have made probably 20, 30, 40,000 more if I scalped more aggressively. If I went also, you could have shorted MSTR yesterday. I saw that, but I didn't want to. I just got out of MSTR on the pump in the opening, and then I was looking at it. I was like, oh, should I jump back in or not? And I was like, oh, it looks like a short's coming through, but I was like, F it. I don't want to babysit it, because the problem with like stocks that tie to crypto, so a lot of these things, CLSK, Mara, and the MSTX. So MSTX is like the 2x of MSTR. So that's the leverage. It's like, I don't want to babysit. Okay. I'm just like, fuck. I'm tired. I did my shit. I'm going back to sleep. Like, I mean, I already did the 24-hour streams. That was already enough for like several months, a couple months, right? 2 months I was doing that. So I mean, you got to be. So this is a young person's game. If you like staring at your computer all day and then look at charts flying around like with multiple monitors, yeah, go for it. That's why you should do this when you're young. Your eyes are good. You're still good. Okay, because my eyes are still okay, but I don't want to damage them too much. So that's why I think Antoine was like asking me about what's a good laptop. I said, like, well, you know what? I think most laptops now are pretty powerful. Like, I would only I would think like minimum they give you 16 gigabytes of memory on the base like things. The only thing I would be considering is like high resolution. Don't skimp out on the resolution. If the laptop like monitor, like let's say you don't have multiple monitors, you got a laptop, you want to make sure that thing has at least 3K resolution. Okay, so I was looking at the Black Friday deals. None of them had 3K. And I said, like, oh, so the Black Friday, Cyber Monday, crapola. Like nothing was really like telling me to buy anything because they did not give that beautiful resolution you need. Because, if I'm out on the road, I don't have multiple monitors, but at least the primary monitor I'm using should have high resolution. So that's the key. You got to protect your eyeballs. Okay, don't be using like subpar resolution monitors and your eyes are starting to like glaze over because all the pixels are so fat and everything's blurry. Yeah, so okay, that's a pro tip right here. Okay, let's talk about OPEC a little bit. OPEC, let's switch to oil.
While OPEC was having forecasts that were showing a lot higher demand, and that was definitely what was fueling a lot of the anticipated return of this production to the market. The OPEC forecast, OPEC's economic team was showing a lot more demand growth that was going to be happening in 2024 and 2025 than I think materialized, and I think that they see going forward. And so this is definitely a reflection of modifications in terms of what they think demand is going to be. I think the long-term picture is still pretty strong, but right now, we're really not looking at major increases in demand.
Javier Blas is a Bloomberg opinion columnist. He also writes the book on OPEC as well. And he had a really great column out earlier in the week that said that the number 2 official in the Iranian delegation to OPEC Plus published commentary on his country's state-run news agency on November 26. It was since taken down. It was taken down really fast. But he argued that OPEC Plus is facing a supply glut largely of its own making following several years of production cuts. Which, as we can understand, that strategy winds up supporting those that have lower input prices, like, say, the U.S. or offshore drillers, and encouraged higher supply outside of the group. Is that a view that is acknowledged at all in any way among the doors of OPEC officials?
So I think that that's definitely kind of this ongoing debate here. Is OPEC, by curbing their own production to try to support prices, is that in effect basically opening the door for all of this non-OPEC production to flourish? And that's been the case basically since OPEC got started. I mean, this is not a new point that he's making. This has always been, an issue. This has always been something that has been problematic. And I think that you have to, when you look at it in the long, the kind of big picture, you're looking at, look, there are cycles in oil prices. It all goes through cycles. There's boom and there's bust and there's higher prices and there's lower prices. And there's always non-OPEC production to contend with. And unless OPEC has real hold on the majority of the supply, they can't control the market. And a period of very high prices is going to lead to more production, from non-OPEC sources. And then you have periods of low prices and you're going to see some go bust. So I think that he's making a point. He's saying that by curbing production for so long, we've supported prices, enabled these other guys to produce more. I think that's normal. They could have decided to continue to take the Ali Naimi strategy, which was all out production, produce as much as you can and try to get these higher cost producers out of the market. I don't think that worked as well as they thought it would. It definitely has potential, though. So it's definitely a tension within OPEC that is ever present.
I mean, it's not clear because the market, once they heard that, okay, you're not going to put more output out there. Crude oil still didn't do anything. It jumped up for a little bit and it just fell right back. It's just like, oh, I think you really need China to stimulate their economy. That's the only way you're going to see oil to go up. So a lot of you guys hoping for oil to rise for your Chevron, your BP, your ConocoPhillips, whatever stock you're holding with oil. Yeah, it's going to take a while. That's going to take a while. But I'll tell you this. You know what? You could buy gas. directly. You could buy gas. There's an ETF for it. So you don't need to be in the futures market to buy gas. You could buy an ETF. So there is an ETF. I mentioned this like maybe last stream or 2 streams ago. UNG. UNG usually has a nice pump in the winter from mid-December into January. Now, you see the last pump right here? This is a pattern that always happens. So this pump gave about 50% gain on UNG. I'm not sure what the options are on UNG. Or you could trade futures. If you know futures, you could do gas futures. RBOB. Master Kim knows that. And so let's say it goes up another 50%. So let's say it goes from 13 to 20, right? 13 to 20, maybe. So maybe it's around this time you can buy UNG. So you guys are lazy, don't want to do futures and whatever. Yeah, you can use the ETF UNG. I think the problem with UNG is the same thing with Boyle and Cold. You will get taxed with a K1 form. So if you know what a K1 form is, quite annoying. So you are going to, so if you're trading Boyle, Cold, UNG, like some grains like corn, using ETFs like that, yeah, you're gonna get this weird K1 form. And so when you do your taxes, be aware that you have to wait. K1 forms are usually late. They'll try to get it to you in time, but most of the time, maybe it's like only 3 weeks ahead of the deadline for individual filers. So if it's August 15th, like you'll probably get your K1 forms. Some companies are so bad, they'll give you your K1 forms months later after the deadline. So you have to do an extension on your IRS. Very annoying. So try to stick with the major ETFs, because like I had this one time I used B-Dry. I was trading B-Dry. Like this thing gives you a K1 form. So B-Dry tries to track the price of the Baltic Dry Shipping Index. And I mean, I was just goofing around. I didn't try to trade this seriously, but you see how crazy the swings are on this thing. But yeah, I had my K1 form like arrive months later. I was just like, what the fuck, you assholes? So yeah, so if you so be aware what some ETFs and also not just ETFs, also companies like some limited partnership. So look it up, limited partnership companies. So pipeline companies. I think I don't know how many of them gives you K1s, and it's really annoying. So yeah, you might find out, oh, this pipeline company has a very high dividend. Let me buy it. And then like I don't know what this one is, but maybe this one gives you a K1, and eventually you say like, oh, this gives me a nice huge dividend, and then all of a sudden you realize, oh, it gives you a K1 way late, and you have to redo your taxes or some bullshit. Yeah, so be aware. Look at anything with LP, limited partnership. Make sure they don't do K1s. If they do K1s, then you're gonna have to be aware that they're passing the tax to you. So they give you that fat dividend, but they don't even want to pay their own taxes to the government. They're making you pay the tax. So not only you get a dividend, you get to pay the tax on the dividend plus the income tax that they incur for doing their own business. They pass on to you, the shareholder. So yeah, K1s are really annoying. So yeah, don't even mention it to me. Like it gives me nightmares when I do K1s. I'm just like looking at it. Like Master Kim knows about it. He does K1s all the time with his gas stations. It's like, look, I'd rather just get a gun and shoot myself, man. Taxes are hell when you do it. Because like the problem is like I could give it to a CPA, but it's like the tax is so simple, it's not worth it. But when you do a K1, it's like, yeah, okay, it adds more complexity, but still it's like I can still do it myself. The problem is like you can't use TurboTax. Like you have a K1, you got to do all that shit manually too, and it's just like, what the fuck? Anyway, I'm just griping about K1s right now. It's like, don't remind me that shit. Okay, let's see what's the next video. What's the next video? We got something about dollar, Intel, Martin Shkreli. Yeah, we have lots of videos to go through. Oh, God damn. Oh, man. Let me see. What the heck? Martin Shkreli or Intel or... Okay, let's talk about the U.S. dollar. I think that's very important.
Uncertainty throughout the world. Germany also facing uncertainty after its finance minister was fired last month, and economic pressures continue to weigh on China's yuan. So is the dollar still the best bet with all the issues taking place around the globe? Kathy Leon is Managing Director of FX Strategy at BK Asset Management. Kathy, what do you say? I mean, is King Dollar likely to stay king for a good long time?
I think that there's many signs to believe that the U.S. dollar, which has had a very, very nice run, is rising for reasons that are very appealing compared to a lot of other countries around the world. For the most part, it has to do with the underlying strength and outperformance of the U.S. economy. We've seen pretty much back-to-back disappointments in economic data from China, from the Eurozone, from other countries around the world, and here in the U.S., we're actually seeing, mostly data improvements. Now, we've got a very important report this Friday, the U.S. jobs report, which, may not be as lofty as people anticipate or economists are looking for, but it was still...
Wrong. Economy's doing fine. So that's why the market pumped today.
Still, regardless, show underlying strength in the labor market. And I think that outperformance will keep the market and keep traders buying dollars.
How does the strong dollar and the relatively weaker or weakening currencies of other countries, whether it is the Mexican peso or the euro or the Chinese yuan, how does that play into the tariff debate? Does it make the tariffs pinch a little less or pinch the same amount? How can we think about these two things in tandem?
That's a very good question. So, the greatest threat for a lot of these countries, as you mentioned, Mexico, Canada, China, in the coming years is going to be the possibility of seeing some, very damaging tariffs. And what ends up happening is that, when you have a situation where the dollar, the US dollar in this case, is so strong, it does make the tariffs a little less painful for Americans. But at the same time, though, I think, if we're looking at it from a trajectory of what it means for those countries, it may make it a little less painful, but I think it still poses a threat to overall growth, and it's going to maybe make more manufacturing facilities move into the U.S. and at the risk of exports from those countries being suffering as a result.
Kathy, when I think about the dollar the next couple of years, it makes my head hurt trying to figure out where it's going to go. In the first Trump administration, we saw a run up by inauguration. It kind of just went flat for the next few years before COVID hit. What do you expect this time around?
Well, I think, Kelly, it really depends upon whether this is just deal making on behalf of Trump. And, we've seen him meet with Trudeau. We've seen him, talk to the European leaders. And if there is a deal or some sort of concession reached before his at the beginning of his term or before anything gets really serious, it may not really affect the currency market that much, and they may actually benefit those currencies and push the greenback down a little bit. So I think it really depends upon whether it's like 3D chess that he's trying to play and trying to get something that's more favorable for the U.S., or it's a serious threat. He's going to move forward day one. The 20% tariff on Canada and Mexico, which I think is unlikely. So right now, what we're seeing uncertainty and volatility, and investors are still, looking at the greenback as a safe haven, and that is the main driver at this stage.
All right, let's look at the bond market right now. So that's related to the dollar. Still doing well. Then we're gonna hit this top area here. We just hit it, 95 on the TLT, the ETF that tracks the 20-30-year bond market. So that's equivalent to, let's look at the yield. That's equivalent to 4.339% on the 30-year Treasury bond. Okay, now I told you guys about TMF and TLT. Like TMF and TLT will give you dividends based on that percentage. So that's why I've been loading up here. This is great for people that just do sector rotation, things like that. So like if you're a boomer, like when I'm managing my parents' money, this is what I do. It's just like, oh, okay, I see this. I'll just load up on TMF here, get my 3% yield, whatever it is, 3 to 4. It's not going to be 4. Let's put it that way, because you're rolling over multiple bonds from the past, so you don't know. It's not going to be like the top range, so it's going to be some averaging. Anyway, so 45 to 50 right now, not bad. Let's see. And I also did Mexico. So they were talking about, the dollar, the dominance of the dollar. So I talked about the EWW ETF here. See, so this was a good trade during the election day. And if you're aggressive, you can use MEXX. So if you don't do options on the EWW, you can use MEXX. I mean, there's some people that are so crazy, they'll use options on a leverage ETF like this. So this is 3X of the daily move of EWW. So this week's up 77%. So I got this below 10 for my parents. So I think this is good. I mean, it's not recommended for everyone, but I think, yeah, a lot of these beat up areas due to the US dollar, like bonds, like Mexico, yeah, and even China. So let's look at China. Let's see this chart here. Yes. So the dominance, this is perfect. So I would probably be thinking of going long somewhere. And the only Chinese stock I've been talking about was KC, because KC just defies gravity. Like, it's up 38% this week for whatever reason. And I mean, if you're high risk, probably this. Otherwise, yeah, for most of China, you can just use the ETF KWEB, KWEB. You can see if it curls up and tries to go at least halfway of this drop here. You can get something. And if you want leverage, there's CWEB. CWEB, CWEB is 2X of KWEB. So that's another way of playing it. Otherwise, you can just play the individual names, but then you have to look through all the charts of individual names. Like this is PDD, is Temu. Temu is back at $100. It used to be 160 just not long ago, right? So maybe it'll bounce back up here. I don't know. There's active stimulus that's going to happen on China, so there's going to be more stimulus, I think, coming down the pipe. They F themselves too much. They need to stimulate. They got to rebubble up their real estate industry and the whole shebang. They screwed up. So that will give a temporary pump on these Chinese stocks. So we'll go over that as the new year gets around. So you're looking for trash. That's how it is. So yeah, Black's talk about like all the altcoins. Yes, we got XRP, Cardano. Yeah. Cardano is like ADA, Doge, that one. Chainlink, I don't have that on the list because it's kind of behind. But yeah, Chainlink, I also know about. But I'm not a crypto guy, so you gotta get around to know what's going on. So let's go and get Shkreli up on the screen. We got Shkreli up. If you remember, I was talking about like space companies, right? Rocket Lab and all that stuff. You see that? I think it was in the description. I don't know if I put it on the banner. Is it in the banner? Let's see. Did I put all that stuff? High speculation stock? Did I put the Rocket Lab RKLB? Is that on there? Man, I got so many tickers flying around now here. I gotta see if I got that. Well, I do have the EVTOL stocks on there. Did I put that? Did I put it on there? Oh. Oh, okay. I guess I didn't. Oh man, maybe I should. Maybe I should. I don't know. But Planet Labs will be. I talked about that one 2 streams ago. PL Planet Labs. But here, let me show you the video with Shkreli. I guess he's gonna breathe for like 10 minutes.
I mean, I'm not a terrible trader. It's not my forte. You guys want me to buy or sell RKLB? What do you guys want to do? Who wants to gamble? Gamble, gamble. Buy, sell. Should we roll dice? Yes, that's right, Albert. For now. That's not going to stay forever. Oh shit, this thing. Google has a thing. You're right. Okay, if it's 1 to 3, I'll buy. If it's 4 to 6, I'll sell. Ready? 3, 2, 1. Hey, and it's 1, which means you got to buy extra. Okay, let's buy. See if we can buy 1,000 shares. Let's go. Now, if you fucks out there, fuck this up for me. I want this stock to be 26 or 27 tomorrow. Tomorrow. The dice said so. Okay, that makes me at least want to look at this. Now I have to look at it.
All right, so Martin Shkreli is a fundamental analyst. Now, if he was me, I would have been saying, like, why didn't you buy Rocket Labs when it was like doing this thing right here? The chart's quite obvious. You have this support right here. Okay, around $4. Right? You could have bought it anywhere here. Let's say you didn't buy it there. You could have started buying when it started making a breakout at 8. So around $8, you could have done this. See? Once you push it up to this liquidity, this is a failed breakout. Two pronounced failed breakouts around August 2022 and July 2023, and then you break out. You could have bought it at 9. But now you just want to buy it at 25 at new highs. Great. Great.
Right? Dice method. The short ladder attack, that's only if you get 3 6s in a row. Then you hit the short ladder attack. And you get the phantom shares going. Trust me, I will sell this in a second if I see anything wrong with it. Gamble. Gamble, gamble. I think I could afford the $20,000 speculation on the rocket company. I think I'll be all right. Gonna be all right. These pictures are cool. Oh, 1 second. Sorry about that. Wait, is the CEO bald? No, that's just the board of directors. If this CEO is bald or fat, it's over. I sell right now and I go short. Rocket Lab CEO. Okay. Sir Peter Beck. Okay, let's see this. Let's see this physique. Doesn't look fat to me. Short, fat, or bald, or tan. Those are the 4 things we sell all. Bezos is different. Wait a second, wait a second, wait a second. New evidence has come to my attention. What the fuck is this? See the hairline too. We got to discount future baldness. Tan is like the #1 sell indicator. Dude, tan, it's over. Sell it and short it. This guy's probably going to be bald. So just be careful for that. He is hedging. Look at these guys on the board. They're pretty solid there. Presenting it Roth. Okay, I think I got a small picture of what's going on here. Pay attention. Yeah. CFO is bald? See, I have them owning the entire launch market, and it's still not along. So keep that in mind. It's pretty expensive momentum stock, like. You think Roblox is overvalued? I think it's profitable on a cash flow basis. Yeah, I was sort of explaining the gamma thing, Scuba Steve, earlier when you could sort of hedge MicroStrategy and the convert. Crack party. Ooh, Huma's down. Okay, so with my software, I can just do this. So I can put this on a special monitor and just make sure that it stays like that forever. Just leave that up here. Never change. Oh, I see. So if I pop out, I can't close this. So if I close this, it'll close the pop out.
All right. Well, that's enough autism for today. I mean, honestly, you could just read a chart. You could have just got this thing way in the base right here. It's got out. Yeah, there were a lot of space companies that did this. And, you know, it was always in August. It started changing. And then once you got to September, and then once you got Trump, it's just like pump. And it's just way too late to get in now. Come on. Look, it's down 9% this week, 9.5%. So he probably bought it at the top then. Oh, anyway, yeah, there you go. Don't learn charts. That's what happens. So anyway, he has a nice little Bloomberg terminal thing. So Martin Shkreli, you can look it up. Godel. I mentioned this before. You can go to app.godel terminal.com. So get over there and check it out. It's free for now. I think you got to pay a little bit if you want a subscriber, and That's it. Yeah. And we have like all these space stocks. I don't have it on the ticker though, on the banner. I might have to add them after PL's earnings. So these might get added to this high speculation list. But yeah, you can wait and see where it pulls back. A lot of these stocks are like that. ASTS, let's see. Yeah, it's pulling back. ASTS, maybe it's worth a buy here. PL, we gotta wait after its news. Yeah, right here. Okay, earnings. PL, so Planet Labs Monday. All right, so around the corner. And what else? I don't know. Market Lab. I don't know anything else. I don't give a Lunar. Yeah, Lunar. LUN. So this is Intuitive Machines. Yeah, pulling back. Maybe worth a buy again when it gets down to 9-ish, 9 to 10 area. Might be worth getting back in. Okay, so yeah, a lot of things pulling back, going all around. So like we're gonna have to go through a lot of charts. Like Nova right here. See, got this bottom feeder type action where you go cut below the previous low. All the tax loss sellers probably tapped out. They were like, I lost too much money on this stock. I'm tapped out. And then now it bounces. Now it retraces. It's probably about to be a good buy soon, if not already at 4. So yeah, we got to look at all these things. So a lot of the stocks you see scrolling around the banner right there. Yeah, pay attention. Look at the chart. There's going to be good entries for next year, and then maybe we'll have to wait for mid-January because I don't know. You got to be afraid of people selling dumping a lot of profitable stocks like Palantir. So people are going to be dumping these. They're like, oh shit, I made too much money. I got to dump it. So yeah, there we go. Oh man, so many things to worry about in the New Year's. That's just usually how it goes. Okay, what's the next damn? Oh, Intel. Oh, okay. Let me play the Intel one. Intel's a piece of crap, right? Man, it's been screwing up my SOX L position for my parents. This piece of junk. It's down 13% this week. 2 new board members. All kinds of like more layoffs are coming. So yeah, we're probably gonna hit 19 again, at least, maybe more. So you see this, like you have this kind of half-assed way of moving up, and then you just go down, and then the news hits, and then you just lose it all. That's just how it goes. So whenever you see a chart like this, you see, you have this kind of action where it moves up and then drops back down. Like, let's look at the monthly chart for Intel, right? Look at how it does in the monthly chart. You see that? You have 2 down moving averages, the 18, the 40. You run up into that down sloping moving average, right? And then you just fail completely. Like you drop, you try, and then all of a sudden April hits and you just go right through both of them. And then you try again and you can't even get to the 40. You get to the 18 and then you just drop again. So you never buy anything that drops like this and you get the first recovery. Like let's say, so this is exactly like how a bear market would work. This is how the 2021 market did. So if you remember 2021, right? It was like once you got into the New Year's, people started selling like crazy. People started talking about interest rates, blah, 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 blah. And then you get a pump, right? You get a quick recovery. And then the next bad news hits. Russia, Ukraine, blah, 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 blah. See? So when something moves down this quick, expect more to pain to come later because stocks don't just like you just do a V recovery. Never, ever. Once you got that kind of distribution where people just sell like this, there ain't no new buyers up here. This is just a short squeeze or something where greedy people start shorting at the wrong time. The smart guys were already shorting way up here, right? And then they were just like a bunch of idiots going down here. You get the reaction move, So all the people are like, oh, it's done, it's over, it's going to return. So the greedy buyers get up here, the greedy shorters get down here, and all of a sudden, all that creates is a new bubble down, boop, and it just slams right back down. So that's it. Yeah. So let me see. Let me get you that 2021 thing. Oh yeah, you see that? Yeah, 2022. Oh, 2022. I mean 2022. My bad. It was 2022. I keep mixing 2021, 2022 together. They seem like 1 year since COVID and was all doing that BS. So yeah, so you see that, and then if I went to the daily chart, I think you'll see 2022. Yeah, you had this kind of thing. You had the first push down or something like that, and then you push up, right? Something like that. So when you look at a bear market like this, you get this extremes, right? So this one right here, all right, 2022, you start January pretty bad. Another pro tip is that bad Januaries or good Januaries kind of dictate how the market goes later. So if you have a bad January, usually the rest of the year is crap. That's one pro tip for you. So how the January, the whole month behaves, that sets a tone for the rest of the year. So you see this, the whole January is like this. And then towards the end of January, you kind of recover a little bit. And that's the first reaction. So kind of like the Intel chart, right? Where you have all the bad news hitting at once because all the people already knew the bad news, but then they just wanted to wait until the New Year's hit, and then they could sell all their winners so they can get out without getting taxed for the previous fiscal year. And then you get this reaction, and then all of a sudden, just more bad news hits. And then you try to go there, and then more bad news. This even worse, right? So that has the same structure. Bear market has that. That's why shorting a bear market is actually quite difficult because you could get ripped pretty badly. Like let's say I shorted here, it goes up 8%. Like the S&P 500 usually will not just go up and down 5, 8, 10% within several weeks, So having like if you shorted here, you probably got burnt, So you have to be careful when you're shorting bear markets. Like it's really painful. Like you got to time it really nicely. Like here, you go like, okay, you time it because if you short it here again, what's that? Oof, that's 10%. So I shorted down here, it burnt. Like I shorted up here. Let us say I shorted here, got a little bit of profit, but I was too greedy to get out. And all of a sudden it goes back up and then I get flushed out here. Yeah, there you go. So bear market, that's what they call a bear market rally. Okay, so you can look that up. Bear market rally. So that's why most people they don't want to short. Like if you're shorting, you got to pay attention. Like you're always on guard. Like shorting is just like it's not natural for a lot of things. Unless it's crypto or something like that. So there'll be a right moment to short crypto, but not now. This ain't the time. So I mean, you gotta get in and out real quick. You can just get burnt like in seconds, milliseconds or something. This ain't the time. Wait until after April. That'll be the best time. But you could do it. You could probably short crypto maybe around mid-January. But it could start right away. It could start in Christmas. I don't know. I gotta see the chart and see if it exhausts the right way. If it has the right pattern, I'll be like, okay, if you're greedy and you want to short, I'll just be like short here. And then you can go jump in and short this damn thing and see if you can make millions off of that. Because shorting is addictive. Let me tell you. So I was doing all the short here on MSTR, right? Like when it cut through here, I was like, oh yeah, short. So I was like short, and it bounced back up, short again, bounced again, short again. And after that, I was just like, nah, I'm not shorting. I should have shorted here like yesterday, man. Like this was way obvious, but I didn't want to do this anymore. It's just like you just short. I don't want to pay attention. I just want to make my trade and go home, man. I don't want to watch babysit that damn thing for the whole day. Shit. Anyway, yeah. But yeah, when you see a good opportunity to short, it's beautiful because you can just make tons of money real quickly. It's just fun. It's just fun in a way. So you gotta wait for the people to get too greedy. That's all you gotta do. Anyhow, that's done with Martin. Okay, we got done with that. He bought his rocket lab at the wrong time, I believe. And we can talk about Intel right now because that's what we were gonna do. Talk about Intel. Intel.
Let's get to a market flash on Intel. Seema Modi has that for us. Seema.
Mike, we are watching shares of Intel down about 3%, nearing its worst level since September now. The company did announce 2 new board members were joining effectively. Eric Maurice, former CEO of semiconductor player ASML, and Steve Sanghi, the interim CEO of Microchip, joining Intel's board. It comes after Pat Gelsinger was forced out of Intel earlier this week, leaving an air pocket of deep experience in chips on the company's board. Last night, Intel's interim co-CEO David Zisner spoke at a UBS conference where he hinted at further cost cuts. UBS analysts there now expecting an additional $5 to $6 billion in savings. Earnings from Intel out in January, so we'll see if we see any type of announcement on cost cuts. But again, we're watching shares down about 4% today and 12% on the week, Mike.
All right. Yeah, no relief there. Seema, thank you.
I'll play some old news here. This one was like a week ago, but I think this was a prelude to what happened to Intel now. Because Qualcomm wanted to buy out Intel. That was the rumor. And then they said, nah. They were waiting for the election. And then after that, they were like, nah, we don't want to. So I think that pretty much sealed the deal. Yeah. Let's see if we got that. Let me see here.
Qualcomm has gone cold, but I love the line in the story, which is it could rekindle its interest a little bit later and come back for pieces. Of course, this is going to be so important in terms of what kind of regulatory regime we get under Trump 2.
Absolutely. And look, it could come back in a different form. As you say, it could come back if the environment, particularly around the regulatory framework, as you point to, changes, becomes more favorable, because that was one of the key sticking points. So going back to September, we know from our own reporting that they put out feelers, Qualcomm, around a prelim takeover of Intel. That was back in September after that terrible earnings report from Intel and the announcement of those job cuts and those weak forecasts. What we understand now is that on a number of fronts, 3 main fronts in terms of financial, operations and regulatory, those are the key headwinds. They would face an antitrust process, not just in the US, but also in their key market of China, where both Qualcomm and Intel have a lot of market share at stake. But also in terms of operations, Qualcomm doesn't operate its own foundry. So the chip making, the semiconductor making parts of the Intel business, that would be in a whole new endeavor. And then on the financial front, $50 billion of debt that Intel has that Qualcomm would have had to take on as a result of this potential deal. So you're right. They've called on it for now, according to reporting. They could come back for different pieces of the Intel pie. Maybe if the regulatory winds change, maybe they come back to looking at it in its totality. But those are the 3 key reasons why they have called, Qualcomm have called on this potential takeover.
Oh, well, that's interesting, right? Now that we know that the CEO was forced out because they want to cut the company into pieces, maybe Qualcomm wants a piece or 2, right? Let's see what happens. Yeah, it's definitely Intel, Boeing, those are 2 blue chips I can add to my long term. So that's definitely something I'm looking at. And what's the other one? Disney? Let's see what Disney does. I mean, Disney already got pumped from its earnings. Yeah, let's see. Wait on Disney. Disney could be another one because two of the pieces of craps from before, IBM used to be a turd. GE, General Electric, used to be a turd, right? And then General Electric got split into 3 companies. I think Intel is going to be that way. Intel is going to mirror GE probably the way it did. It took a long time, many years before it could turn around. So at that point, before it could get a breakout above $50, $60 to eventually the $175 that it is now, yeah, it's going to take many years. So it's going to be a patient thing. So yeah, get your leaps. I think that if you put it out far long enough, it's going to be worth it. Yeah. Boeing, I don't know. I wonder if they'll try to do some turnaround in an extreme way. I don't think so. Yeah, Boeing, I don't think would. Yeah, IBM took a while too. IBM was in the trading range for many years since the dot-com era. Yeah, let's see, 200, it was stuck at 120, 200, finally broke out of 200. Yeah. So IBM broke it. It's more of a software company now. IBM, they try to do that cloud stuff, and I don't know how much growth IBM will have, but yeah, there's a lot of these companies. Honeywell too, right? Honeywell's a good company as a blue chip. Yeah, it's been in a range since 2021. Yeah, Honeywell could be another one. It's not a bad company though. I'm not saying that. I'm just saying like, yeah, there's a lot of these blue chip companies that haven't done anything for a long time. Some longer than others. Intel definitely. Intel terrible. Terrible stock. Terrible company. There you go. Okay. All right. Talk about Kroger, talk about Lululemon, talk about that. Housing. Housing. Any housing stuff? Oh, government jobs. Okay, yeah, let's talk about the jobs report. Let's do that. So I'm going to do one video before the jobs report.
Welcome, and because we might hear from the Department of Government Efficiency in a few minutes here, tell us a little bit about this slowdown in government hiring you're picking up on.
Yeah, so we've been seeing, and first of all, Kelly, thanks for having me back. We've been seeing throughout the whole year government jobs being either in the number 1 or number 2 segment for most recruited positions. And this past month, we really saw it really completely fade away, just a complete downturn. And we really think that where it was shooting up almost 138% in October, sort of post-election, really just gone. So a real pullback. I think the real question then is what's replacing that? What's going to replace all these these government jobs that people were filling? And certainly the Department of Government Efficiency would have their impact on those jobs themselves.
But what do you think is going on here? Because obviously this is all happening before they do anything like trying to execute on their mandate.
Look, we had speculated that this was a little bit buoying up the overall job market for government positions. And so not surprised that there's a little bit of a pull down there. So rather not speculate on what the government was actually doing to keep those job numbers up.
Yeah. Healthcare, Evan, is another area. A lot of analysts are watching the jobs report tomorrow to see if, it's been so strong, and many people have made this point, that between government and healthcare, that's really where most of the job growth is coming from vis-a-vis the private sector. Well, healthcare is technically part of it. So are there any trends there that you can kind of shed some insight on?
The other thing that's interesting, so first off, yes, I think healthcare is always good. We saw some increase in logistics and food services. The other thing that we saw from recruiters is an increase in recruiters in the electronic manufacturing space. So again, very interesting that if we're going to start bringing back manufacturing jobs, a leading indicator there is where are the recruiters getting hired? So we're seeing recruiters getting hired in that space, also in digital commerce services. So I thought that was actually a very interesting observation as well as part of the Aura job support.
And then on the hiring front, this is the one area where if we want to kind of move through whatever soft patch we've experienced into something more sustainable for the economy into next year, we've got to see an increase in hiring, and maybe lower rates would help with that, even though we wouldn't seem to need them by the way the rest of the economy is doing. So where are we seeing hiring, and where's it kind of a little bit drier?
So the interesting thing is I would say that, the sentiment went up, right? So recruiter sentiment's been down or pretty stagnant for the last bunch of months. It actually ticked up to 3 out of 5. Again, we're not back at the 4 levels. We're not at the Bitcoin levels of 5 or 6, but 3. We also saw the workloads increase, and then also the wages increase. So when you see those 3 things move, that's going to point to some greater hiring. The JOLT report showed that quitting, while much lower than it was year over year, are actually increasing also. So people are moving around. Hiring is up a little bit. So we certainly saw those in the sectors. Now, what you're showing on the screen, in the open jobs, retail and technology really came down, whereas finance was actually up. So that was nice to see that finance jobs might be coming back as well.
Oh, Well, that'll be good news, I guess, this time of year. I mean, it sounds like the bonuses were decent, given that it was kind of a down year for deals and so forth. Evan, we appreciate it. We'll see if tomorrow can deliver, and if it does, what that means for hopes of a rate cut later this month. Always appreciate your time.
Thank you. Thank you so much, Callie.
Evan Sohn of Recruiter.com.
All right, so we had good news on job report. So I didn't download the video apparently. Let me get that for you guys. But right now, let me show you the Fed Watch metrics. So let me share my screen. So interest rates are predicted to go down by 85%. So it used to be 71% yesterday, 66% a week ago. So now we got 85%. Very good. So that's quite bullish after all that new data that came through. So you can go look at it yourself on the Fed Watch tool. Get you the link here. Well, I'm downloading this stuff. Okay, it's done downloading yet. All right, here it is. Yeah, you can look it up yourself. So you can always monitor things yourself. Go to cmegroup.com/markets/interest-rates/fedwatch-tool.html. Maybe I should get a tiny URL for that thing. Whatever, I use it all the time anyway. Okay, guys, let me play the video. What we got here, what we got for the jobs report. How did the market feel about that? Okay, done. Download it.
7-8 minutes to tune over these numbers. What stands out to you, sir?
Thank you, John. As Jim Bianco pointed out, the challenge for the market and for policy would have been a consistently strong report. This is a somewhat strong report, but not consistently strong. So it is strong on the earnings side. It is strong on the labor participation coming down side, less supply, and is also strong on a small beat on employment. But the fact that the unemployment rate went up means that the Fed will be comfortable cutting by 25 basis points, means that the market will increase the probability of this happening. So on the policy front, this did not complicate what would have been a messy situation for the reasons that Jim pointed out. On the economy side, John, just a confirmation that the labor market remains solid and that U.S. exceptionalism is set to continue.
Mohammed, it makes the decision easy to cut 25, maybe. Still got to wait for CPI next Wednesday. I wonder, though, if it's still just as hard to signal anything for 2025 in the news conference. What is that exercise going to look like in 2 weeks' time?
So it would be hard for this Fed because this Fed is so reactive, is so data dependent, that it will simply tell us that it will remain data dependent. And I suspect that while the range is going to compress a little bit, you're still going to have quite a wide range in terms of the terminal rate. The Fed always has two options. The option it took in 2021 and got completely wrong, which is to look forward, and now it shied away from that and went to the option of being excessively data dependent. And I suspect they'll stay excessively data dependent. So we're not going to get any strong signals other than we will remain data dependent.
Mohammed, last time you were on for the jobs report, you said inflation is not dead. What kind of number could we see that could potentially change the Fed's thinking at this upcoming meeting?
And you heard from the chair saying that inflation has been more stubborn than he and the Fed expected. Look, we're going to see inflation stuck in the 2.5% to 3% range for the Fed's preferred measure, the core measure. And the Fed is going to have to make a decision. My gut feeling is that it will run with this number there, promising us 2% down the road. And I suspect we'll see 75 basis points of cuts still, but they're going to be spread out. Like you just heard, it's going to be cut, pause, or skip, and then cut. And then we're going to have a huge conversation Was this a hawkish skip? Was it a dovish skip? So we're gonna go to the now because we lack now because we don't. So we're gonna go to the third differential now because we lack proper policy guidance.
All right, you guys got that. Third differential, blah 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 blah. You know, it's all academic, right, at this point. So it's all about perceptions, right? How you perceived, how you perceive. Why did you cut the rates? You cut the interest rates because you're afraid the economy is going to collapse, or because you think inflation is going down, so you don't need to be aggressive. Blah blah blah. This is where the stock market moves up and down. This is why, and that's a thing you can't really predict, right? But if you look at the charts, maybe you can at least have an attempt, at least a chance to do it. Because there was a lot of news. A lot of the trash stocks I was looking at had news, right? We are talking about Sound, S-O-U-N. So, on December 5th, let's see. They had a press release. SoundHound AI, a global leader in voice artificial intelligence. And Torchy's Tacos, the cult favorite taco chain known for its damn good tacos, have announced the rollout of SoundHound Advanced Voice AI smart ordering product, now live at all 130 Torchy's locations. Now, okay, look at this. Tell me if this piece of news warrants 60% gain on SoundHound in 1 week. Can you? I don't know. I can't predict any of this shit. I don't know what the heck's going on. All I can tell you is I look at the chart. It looks good. And something's about to happen, maybe. And if it does, it's going to pump. And that's what it did. I have no idea if having a taco stand as your customer warrants 60% gains in a week. But here we are. Let's see what else we got. SoundHound AI to participate in investor conferences in December. Maybe they said more than tacos. Okay, because they had investor relations in December 4th. 3:15 p.m. my time, Pacific, and 6:15 p.m. I don't know. Did he say anything that was more than tacos? Was that warranted 60% gains? I have no idea. Another stock, I was talking about these bottom feeder stocks, NVTS. It had let's see, showcases breakthroughs at CES. CES isn't until January though, right? So I have no idea like why this press release would do anything, but you know, we got all this stuff here. Look at this. Let's see what major technology and system breakthroughs this company got here. So NVTS Navitas, world's only 650 volt bidirectional gallium nitride fast power ICs. Any of you guys know what gallium nitride? I don't even think you guys even know the periodic table, do you? Anyway, before world's first 8.5 kilowatt AI data center power supply. Wow. All right. So does that make it pump like 20-30% in a week? No clue. How about this one? Ennox. I was talking about this as a bottom feeder stock. So you see this tickers scrolling underneath your banner right here. Look at them. So I was mentioning this one for a while. This Rayleigh company right here. Nanox Arc receives additional FDA clearance to produce tomographic images for general use, including pulmonary, intra-abdominal, and paranasal. Oh, paranasal? Shit, you gonna look at my nose, buddy? Indications in addition to its previously cleared indication of musculoskeletal system. Blah, 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 blah. High voltage, digital, X-ray. Okay, FDA approval. Now, so this one, I was talking about a couple streams, maybe several streams ago, now up 30% today on this news. All I gotta tell you is that you can't predict any of this stuff. You can't predict the news. You cannot predict the reaction to news. Like you would think like tacos. How does that mean anything? Or, but the way the chart is set up, you just have to take the bet. And I think the problem right now I'm having is that I want to give a way to quantify it. So I kind of explained it a little bit. You look at the SoundHound chart, right? And you compare it with something like NNOX or RXRX. Like, this is very different. So SoundHound had a better chance. But obviously, you know, that doesn't mean anything either. Like, any event can happen randomly that you can't predict, because it's not like, I'm trying to say it's not random though, because I was talking about that auction market theory. It's random to you and me because we don't have a complete model of how the market is working right here. There's probably a lot of people that bet against NNOX. There were probably a lot of people that were for it. And there were probably people that were setting things up to the point where, if NNOX right here, I'm showing you, the volume is very little. It's not hard to push this thing up and down. So when the news dropped, you see it pumped and then dumped right away, which is the typical thing of NNOX. But then the day after, it started pumping again. So now it being up 30% means nothing. It goes up and down 20, 30% on news, and it doesn't matter. What does matter is that I'm looking at the shape of things here. Look at the chart. You go from 86 in 2021, the high of all the biotech companies. You drop down to the lows, and then you keep thumbing the lows again and again and again. Eventually, you're going to build a base. This could be the beginning of the end of that base. You could see it like move up, right? Let's say, you know, I'll get this brush here. Let's say it just does this. It goes up, it goes down, it goes up, it goes down, and then, but it makes higher lows. And eventually it'll just complete and then shoot up to 50, like from 10. So that's what I'm looking for. These are the characteristics I'm looking for. I'm looking for characteristics. All right. So that's why I want you to know. I mean, I should get a pen tool or something, like a tablet, anyway, so I can draw on this stuff. So yes, that's what you're looking for. All right. This is what you're looking for. So we can do that, because you want something like sound to do like that. You see this? It makes the bottom and then it makes a higher low up here. A shelf shape, and then you go there. Palantir did that as well, right? You see Palantir did that. It made the low, it jumps up, make a shelf before it does its launch into this year, right? That's what it does. That's the same pattern. And Carvana also did that. You drop, and then you make a little shelf here. Carvana was kind of more like subtle, yeah, because it went up right away. It didn't make that much of a shelf, you know, around here, and then made a secondary one and then moved up from there. So these are the things you're looking for. You got to look for these patterns, because they signal momentum shift upwards or downwards. Same thing. You flip it around, you could go the other way and short a company. Okay, so it's the same pattern each direction. Yeah. Okay, so let's finish up. Couple more videos. I wanted to go some charts, but I guess I'll save that for later. I'll save that for some other time, because I had a whole list of charts I want to review, but I think 2 hours is good for today. It's a Friday. We can go over that later, over the weekend or something, and then we can go over it. So I had one on home building. Okay, I had one on home building. What else I got? And utilities. I'll play the utilities one first.
Guest says the hyperscalers' commitment signal long-term value for nuclear power. Joining us with some picks, Barclays analyst Nicholas Campanella. Good to have you, Nicholas. You know, we talk a lot here, as you might expect lately, about power, which is in many ways seemingly the gating issue to the never ceasing demand for data centers and their compute power. But nuclear, it still seems as though it's a long time. And so I want to start there. Give me the timeline that is reasonable to expect for these SMRs and others to actually begin to operate to provide the needed power.
Well, you're absolutely right, David, and thanks for having me. You know, Meta put out that RFP a couple days ago asking for 1 to 4 gigawatts of new nuclear by 2030. 2030 is absolutely ambitious. You know, we do think that new nuclear, if you started today, would take anywhere from probably 8 to 10 years to build. Now, the utility sector is very well positioned here. Actually, if you think about it, the last nuclear renaissance that we went through, there are plenty of sites that have early site permits or COLs, and that essentially allows us certain Southeast utilities to be better positioned than others to capitalize on this trend if they were to make the commitments. Now, what we've seen out of Meta with that RFP, you know, we think is laying the groundwork for additional large-scale and SMR commitments in 2025.
Yeah. All right. Let's start with the SMR side. I mean, some say, well, the technology is not proven. Others say, of course it is. But either way, it's going to be a while. Just give our viewers some sense of your expectations for the ability of some of these smaller companies to really get these things up and running for the hyperscalers and what the opportunity may be.
Look, it is going to take a lot. But what we are seeing right now, and I'll speak specifically from the regulated utility standpoint, the regulated utilities are more interested at this juncture in doing SMRs, and what you've seen is certain frameworks like the Amazon Dominion MOU, where Amazon would essentially be there working through the construction and then potentially being able to kind of transfer in that first-of-the-kind technology to Dominion. From there, you'd probably see the utilities kind of step in and build these themselves, but I do believe that this is somewhat first-of-a-kind technology risk, and you're going to see that be shouldered to some of the smaller, more speculative companies.
Yeah. All right. As for the larger guys, I mean, if you come into this year saying, hey, buy these stocks because there's going to be suddenly everybody's going to realize that there's going to be enormous demand for power, you would have been right. Do you still buy them here, given the move up in so many of these names that has occurred already?
We do agree to still buy them here, and we say that because with the ever-growing demand environment, there will be a mismatch in supply-demand into the late decade. As you see AIs and data centers start to uptick, 2027, 2028, we're not going to have enough resources in this country to supplement that demand. Gas turbines are largely sold out between now and 2029. We already know how much renewables we can kind of bring onto the grid between now and 2026, 2027. We don't really see the ability for those numbers to really go up. At the same time, you've seen virtually every single demand forecast across this country double in the last year. And we're finally seeing regulated utilities start to have earnings revisions from this, like Entergy. So the names that we really like into next year, Entergy, as well as Dominion, who we think can, capitalize this on the regulated side. And then in the IPP side, we still think that these companies are going to benefit from higher power prices. Talon and Constellation specifically are names that we like there.
Yeah, I was talking about also water utilities. We got to talk about those, and not only electricity. So that's something that's a theme that I'm gonna keep emphasizing into next year. So right now, just focus on all these crypto and small cap stuff. But later, when you get all your profits, like later in next year, you start shifting them into more utility stocks. Okay, so yeah, there gonna be a lot of them, and we've only touched on a few of them. And I think there was one with the water. There was some news about some water cooling thing. So there's a lot of infrastructure stuff. Let me show you AAOI, right? Let me show you that one. AAOI is optical. So it was down yesterday, like 21%. It kind of recovered a little bit. So there's going to be a lot of this AI data center stuff that has the optical things. Let me see what the water cooling news was. Dang, water cooling. Oh, man, I got to go find it. All right. Where is it? Where is it? Where is it? Man, it was some kind of like, oh man, I forgot what company was even interested in that. Okay, let's see. Yeah, I know Vertiv, but it wasn't about Vertiv. VERT is the one we've looked at before, but there was another company. Data center. Oh boy, I gotta go find this thing. Now I gotta go find this. This is annoying. Okay. No, okay. Well, let me play this video while I try to find it then. This is the last video that we're gonna see today. Home building.
It's a building beat. Construction spending better than expected and climbing 0.5% from last month to just over $2 billion in October. That's a 5% increase from the previous year. We found out from Commerce this morning. The Homebuilder stocks getting a lift on this. Shares of Meritage, Toll, KB, and Taylor Morrison all up 4% in the past month. Joining me now to discuss what to expect from the space next year is Philippe Lord. He is the CEO of Meritage Homes. Philippe, it's great to have you here. Welcome.
Thank you for having me. Good afternoon.
Good afternoon. A lot of people have been waiting for an inflection point in the housing market, which, you know, you're in the new build category. It's been a little bit better, but in the existing homes and the thing over, I mean, it's been absolutely frozen. Who would have thought mortgage rates would still be this high?
I think most people did. Rates moved down earlier this year, but then they went back up. Even with the Fed cutting rates, mortgage rates really don't move off of that as much as they do off the 10-year. So rates are going to stay higher for longer. We expected that. Really, as a new home builder, we have a unique opportunity within that environment. As you know, we've been able to buy rates down for our customers, which is allowing us to perform better despite the existing home market really being locked in with all these folks sitting on a rate below 5%. When rates are this high, they just really have no motivation to move at this point. And that's created an opportunity for us as new home builders to really step in and fill that void.
Yeah, and you guys are really active in the Sun Belt, kind of in the southwest and even in the southeast. And those are areas, Philippe, that lately we've been hearing about a lot more excess inventory, maybe more in the rental portion of the market, but that things have really cooled overall. Do you think that's true?
Yeah, inventory is definitely up across all the markets. Both existing home inventory is slowly coming back, and then new home construction is definitely up as well. But that's really intentional by all of us. We still see an opportunity to sort of fill that void by providing move-in ready inventory for all these customers that can't find that inventory in the existing home market, which is traditionally where they shop. So a lot of new home builders are building more speculative inventory to really fill that void. And we're all expecting a strong spring selling season based on what we're seeing today.
Right. I mean, only 15, well, maybe almost 20 years ago now was when the spec inventory was such a problem as the housing crisis hit. Now it's completely the other way around, which is so interesting. How much can you buy down mortgage rates before you're not profitable on your home sales?
Well, it just really depends on so many other factors despite what rates are. But I think what we're seeing today is folks want something below 5%. And with rates in the high 6s or the 7s, we're able to do that in a profitable way. If they were to go higher than that, I would expect people to be okay with something more in the 6s. So I think people's expectations set over time as rates continue to stay elevated or elevate over time. But right now, as they're hovering within that high 6, low 7 range, we're able to really buy people down into something below 5%. Which really is the key to unlocking affordability for most of our customers, which are first-time home buyers.
Yeah, I mean, look, we could get there for mortgages overall. The 10-year yield has been retracing somewhat lately, as I'm sure you know. 17, I don't know if that was just a kind of light trading day kind of print. But if you do that and then shrink the spread between, kind of the 10-year, the 7-year, whatever, and the mortgage rate, you could all of a sudden be talking about 5-ish on a national average. Wouldn't that be nice? I don't know if you view that as a real headwind, though.
Oh, I think that is nothing but good. I think anytime rates go down, it allows more people to afford a home. And so that's a good thing. There are a number of folks out there that need a home right now that simply can't afford a home at these higher rates. I also think unlocking the existing home market is also good. There are a number of folks that are living in their home right now and actually really need to move. They've had a life change event and they are looking for something different in their home, and they can't move right now because it just doesn't make economic sense for them. So I think lower rates are nothing but good for housing across the board.
Yeah, we had one builder analyst the other day suggest to us that they should write stimulus checks to people for selling their homes in order to just get that supply onto the market, maybe, give them the incentive as well. But the number would have to be quite large, I suspect, to move the needle. What about with the new administration? I mean, anything there, whether it's from lumber tariffs to, catalysts like the one I mentioned, if they were to do something on the supply side for housing, anything you expect?
Well, I'm optimistic because I think a strong economy, low unemployment, and a strong consumer are the keys to a strong housing market. That being said, the fourth leg of the stool is affordability. So anything that the new administration does to impact affordability, both positive or negative, is really critical to our business. If things get more expensive and we can't bring supply to the market in an affordable way, that's not a good thing. But I think this administration is focused on deregulating certain things and possibly allowing us to bring more supply to the market, which is really the key to unlocking affordability. There's just more demand than supply today, and that's why prices are staying where they are.
And finally, is it true that you guys are doing a stock split? The shares are only, a little under 200 right now?
It's true. We announced that last week. Really, it's all part of our shareholder return strategy. Whether you look back over the last couple of years, we've implemented a dividend, we've been buying shares back, and now we're doing a stock split. It's all about returns to our investors and creating more opportunity down the road for them.
All right, Philippe, thanks so much for joining us to talk about it. Really appreciate it today.
Home building. Let's see what we got here. So the chart for home building still hasn't really done anything. We're still stuck in this range. So I'm looking at the ITB home construction ETF. Yeah, it's still stuck between 115.79 cents and 121.85 cents. This is where the range I put in. So even though, yeah, the interest rates are improving, yeah, we're still stuck in this range. So no recommendation from me. Now I found that stock about water cooling. So it's a ZJK. That's the ticker. It is ZJK Industrial Corporation. So they got a contract from NVIDIA to do water cooling. So you can pair that up with VET. VET, I think, does the same thing, right? VET? Was it VET or VST? I don't remember. Now I don't remember. Was it Vermilion? No, it wasn't VET. I think it was VST. My bad. VST. Was it VST, right? Yeah, Vistra Corporation. They also do water cooling for data centers. So VST, I think. So let me double check that. Vistra. Water cooling. It's either VET, VST. Come on. Yeah, the longer you stream, the slower your laptop will be. Great. Man, if only those Black Friday, Cyber Monday deals were any good. Okay, VST, blah, blah, blah. What do they do? Yes, I was right. They do liquid cooling. Okay, VST. So you got VST. All right, so you got that one. So you got two stocks with water cooling. I don't know if that's going to go anywhere. But hey, you got something, right, to look at. Because ZJK was up, 200% at one point on that news? So this thing had pretty much no volume until this news popped up. 345%. Great. Yeah. Good luck with this one. Probably something you can put in your trading stocks list. Yeah, maybe. I'll see how it does. It doesn't have much history though, so there's nothing you can do too much with it. It's high risk, definitely high risk. But I'll keep a note of it. See what happens next year. Might be interesting. Okay, we covered that. NNOX, we covered that. Good. We covered NNOX, NVTS. Let me show you NVTS for a bit. This, yes, perfect. So it went down to $1.84. We got up to 4. Perfect. So now wait. We're hitting these down moving averages, 40 moving average, and the 18 on the weekly. So yeah, pay attention here. If there's any pullback here, yeah, you can go buy more, add, or if you weren't even in it for this move, yeah, just wait for that, and then you can get in. Okay, guys. So there's gonna be a lot of these tickers that I'm gonna have to go through. I had a whole list, and yeah, we're already at 2 hours right now, over 2 hours. So go to sleep, relax. Plenty of work to do. There's always gonna be more tickers every damn day into the New Year's. So yeah, I'm keep adding it to the list. Yeah, like these ones, right? Archer. Yeah, my cousin. Like I tell you, my cousin about sound. Like she was asking me about Archer, so she bought some Archer, and I was like, oh, it's going down. So it went down 23% December. I said, like, yeah, just hold. Now it's recovered, right? See, you pull back, you jump. This is the right environment we have here. This is the right environment. You got everything correct because ARK is going up. So all the Cathy Wood stocks going up. ARK, ETF, ARKK. When you see that going up, you see the XBI going up, biotech going up, right? It hasn't recovered fully from the JFK options expiration month last, but we'll see how it goes into January. And then small caps. Yeah. So hopefully this is a breakout, a real breakout, finally, after all these years of waiting for this huge smile to form from March 2021 to November 2024. That's how big things can get. That's how long things take. You have to wait for the right conditions. You don't force a trade. You don't force an investment. You got to look in like, well, I like that company, but if the sector is doing crap, why do I jump into it? But hey, since summer, April, all that, things are moving now. So yeah, this is it. This is the time. I think next quarter you'll start seeing the weakness appear in all the large cap stocks. Nvidia will stop performing. That was the leader. You'll see all the Facebook, Netflix, all of them will stop performing as well. They'll all stop. And then you'll see them going sideways to down. But you see these small caps move up into the summertime. And I think after that, into the summer, at that point, you got to get into commodities type stocks. So the Chevrons, all the energy stocks. I didn't go over them today, but yeah, those will be the stocks that will start performing better. So what you're going to see is you're going to see a transfer of money out of the large cap tech into the small cap techs, mid cap techs, right? And then you see it slowly fold into other things. I think banking stocks have been doing so well right now as well. I'm not sure if they're going to continue. I'm going to have to watch that as well. And then the construction and other things. We'll see how the apparel and all these other companies do well as well. So there's a lot of stuff to look at. That's why you need a whole team. Most people, they won't have the time to do any of that shit. And if you do, the only way you're going to have time is look at charts, because nobody's going to look at the financial statements of a dozen companies, let alone hundreds to thousands of companies, let alone to like millions of companies. Because if you're going to look at all these small caps and tiny micro cap companies, yeah, there's no way. You got to spend time looking at charts. Charts, at least you can do quick, right? And hopefully with AI, maybe down the line into next year, we get AI to start doing these things, it'll be a lot better. Yeah, we'll be more efficient. We don't need to have huge research firms like a bank, hedge fund, or whatever to do all the research. It's going to be quite simple. Okay, let's see where Bitcoin is. What's Bitcoin doing? Still hanging around 100K, right? Nothing then. Enjoy your weekend. There's going to be a lot of cryptocurrency gambling, I'm assuming. So let's see. Yeah. Now, if you make money, please donate. Porsche's things, PORSHAJAYE. Okay, that's the Cash App. Emails on the thing too, the banner. And let me play the dang ad for you to close it out.
Feel like I should go. Feel like I should go. Feel like I should go.